morning, everybody. As you well know, I'm John Kaiser. The topic is, can a bull in a china shop vanquish the bear? We are back in a bear market, and my own feeling is it is not clear what is going to take us out of the bear market. And the companies I brought in today are sort of geared towards, okay, if we have a bear that's not going to create a rising tide that lifts all boat, I want companies that have an interesting hook that allows them to flourish on their own right. So what I'm going to do in this presentation is first talk about why I think we're in a bear that's not going to turn the juniors around anytime soon, and then briefly touch on a couple of the ones that were here in January that fit with my theme, and briefly why I like these companies, and then we'll go have the companies explain directly what they are all about. So this chart here, the green is TSX Venture non-resource traded value, and the blue is the resource sector traded value, going back to 2009 when the sort of right after the crash and we started this new cycle. And you can see the green pyramid in January. That was the cannabis blockchain blow-off. I believe that bubble has now peaked. It's going to take some time for it to diminish. But unfortunately, there is no handoff of the torch to the resource sector, because you can see the declining value traded for the resource sector. There wasn't much of it. There wasn't any January effect at all. It started trending down already in December, and it has continued to trend down. And the percentage that TSX Venture Resource Juniors represent of TSX Venture trading is at amongst the lowest level it has ever been. Now, interestingly, the value traded in the non-resource stocks is concentrated in a relatively small portion of all the other non-resource listings. There's over 2,000 listings on the venture, and only 1,200 of them are resource sector companies that I track on my website. So I'm showing there the green is the little periods where we had a bull cycle. We had that long period starting in mid-2011 that turned around in 2016. It looked like we turned the corner, but in August 2016 it stopped. We had a blip in the first quarter of last year, a big funding round, but then everything kind of faded, and now we're stuck in a bearish mode. And the situation is still pretty dire. Half the companies that are in the resource sector on the venture exchange do not have enough money to continue to exist. Funding level, the green that you see on the chart on the left, it's higher than it was in the bear market years, so there is still sustaining capital going into these companies, but there's only about 400 companies out there that really have enough money to do anything interesting, which makes the job a little easier because there's so much that is easy to ignore. You don't have to waste time thinking about whether this is going to be the next big one. Now, the money that's been raised in the last couple of years, we did have a pretty good funding boom, and this splits it between what's for discovery exploration projects, which are ones that haven't yet delivered a preliminary economic assessment, a PEA, and ones that are in the PEA. And you can see that most of the money has gone, big chunks of financing has gone into feasibility demonstration. But the whole feasibility demonstration thing is based on the optionality trade, the hope that higher metal prices will drag these back into the money. And we have this problem that the big companies, the mining companies, after overdoing it in the last bull cycle right up to about 2013, are now looking and saying, you know, we've gotten rid of all our mistakes, we're doing good cash flow. If metal prices do go up, we're just going to rake in the cash and look good for our shareholders. So that whole M&A stuff that we saw going, $100 billion from 2003 until about 2014, that's not really happening anywhere. So where are the capital inflows for this space that allows the recycling and the trickle down into the discovery juniors? Now, one of the big themes I talked about in the last 2 years was this phenomenon where Osisko Mining was able to raise over $100 million for brute force rethinking of the windfall deposit, something that 1.6 million ounces, but at 8 grams or so per ton, but it still didn't work in the PEA that they did. But they went in there and said, we've got a new geological model, all we need is lots of money. Bay Street did step up. They are no longer stepping up anymore for this stuff. They are now into the cannabis stuff. They are shunning the resource sector. And they put out an updated resource estimate which only boosted the resource 80%, and the grade dropped maybe 10, 15%. And that's after $143 million. They now have 2.9 million ounces. That's still not clear that it's going to be worth mining at $1,300 gold. So this model is also a bust, that simply putting a lot of capital into the play will make magic happen. The other play that I had lots of hope for in these sessions at MIF last year was the Pilbara play by Novo. That looked like it could be an off-scale discovery rivaling WITS 1.0, which is over 2 billion ounces in South Africa. But that play has stalled on the measurement problem. The gold is in a much larger nugget form as opposed to South Africa, where it is, although it's detrital, it is the width, the thickness of a human hair, so in other words, quite fine, and it's, in 0.5 meter to 1 meter, and when you drill with core assay, you can actually assay. So it can be 2,000 meters deep. You can still measure it. With these nuggets spaced all over the place, you can't use core drilling, and now they're finding out even large diameter drilling doesn't work. So this play, which could be fabulous, is now stuck with this problem. How do we measure it? So we are now like Novo's now basically dug a bunch of holes, pits along the exposed edge of the wedge, and we're waiting for the results. And if we come back with grades of better than 5 grams per ton, so that they can argue, geez, well, we just strip mine this, they could have a very substantial resource, 10, 20 million ounces there, open pit mineable, and that could make the company very valuable, probably be absorbed by Kirkland Lake. And then the play shifts to the larger area, because then anywhere where there's an edge of the Fortescue, the Mount Rowe basalt exposed, people are going to be trying to figure out how to get at it. But again, like in this examples of Loudon's patch, if you have to drill through 10 meters, dig through 10, 20 meters of garbage to get your little 5-ton sample, that's going to be hideously expensive, especially since you don't know where exactly to start. So this play right now, it still has potential to catch fire and make this Pilbara really, really hot going forward, but we need Novo to demonstrate that the grade is high enough on an average basis that we're going to have a mineable situation. So what's hurting the resource sector is the rising interest rates. The green is the yield curve for right now. You can see also inflation's rising, the interest rates are rising, the real inflation rate is rising. None of this is the real rate of return on the 2-year T-bill. None of this is particularly good for gold. It's also probably not particularly good for all this real estate debt that's still out there. So there is a risk that as they try to normalize the interest rates, they will overdo it and tip the economy into a recession. Because of this tax change that they did, they have created at least a temporary stimulus for the economy at a time when it wasn't really necessary. So inflation could start to accelerate, and they might start to put the brakes on. And of course, that pretty much kills the likelihood of doing an infrastructure renewal form of fiscal stimulus. So the general view is that the business cycle is coming to an end, and normally we invent reasons as to why it's going to, this time's different, it's going to continue longer, but the mining industry is having none of that. They're not building new stuff, and in the process they are probably rebuilding the problem of a supply-demand imbalance down the road if this negative downturn that we're sort of expecting fails to materialize. Now, what has me really worked up is this policy of trying to create a trade war. And what's really interesting about it is it's the antithesis of what we've heard about for the last 20 years from your traditional speakers at these conferences about free trades, free market, that's all wonderful, government stuff is not good, you should let the market capital figure out where the best price is, who can produce it cheapest, and allow it to flow. That's how a proper market economy works. But the policies being pursued by the United States are threatening to throw this down the toilet, to disrupt a rules-based order whereby disputes about somebody cheating in the free market system are resolved. And the argument about, well, manufacturing jobs have all gone away, we need to bring them back, it is bogus, because as you can see in this chart here, yes, that period when George Bush was in charge, that was the great migration of jobs to Asia, because that's where it was cheap, that's where the capital was. But that ended in 2008. The trend has reversed. China is a super corporation that uses its own techniques to bully the companies, to manage the economy. And companies are realizing they can't do business in China, and they're vulnerable. They're having their technology stolen by China and then replicated, and then rules invented to stop them from flourishing in China. So there's a natural tendency to reshore into jurisdictions, and the United States is still the biggest economy in the world. But what the feud is really all about is the undisputed fact that unless something terrible happens to China, in the medium term, China's economy will be as big as that of the US and probably bigger, and it will evolve its own military power that will rival that of the United States. And there's two ways you can deal with that. One is you manage the transition and you try to ensure that China adopts sort of democratic values and that the world ends up collaborating in a peace-based spirit. But the other is to try and undermine the rising rival, and that is the Trump policy, is to completely destabilize China. And I liken it to the United States is like the biggest mother of all submarines, and it's preparing to go deep. It's preparing to take the global economy down and destroy all these rivals everywhere. And that, of course, everybody understands that. They know that the United States can go deeper than anybody else can. So they're already starting to position to do without the United States, to work around the United States. And this is the key part of the Trump policy that is absolutely frightening, that if the United States forfeits its leadership role and goes this way of trying to be a thug where everybody is a vassal state at the mercy of the United States, and even if it temporarily succeeds at that, it will destabilize the world. We will have these other guys like Putin, Xi Jinping. They'll all step in the breach. They'll start to push. Suddenly America will look weak, and then we have a serious problem. And look at these flashpoints. When Trump's pushing for the Balkanization of Europe. He cheered Brexit. He likes it when all these populist authoritarians take charge in places like Hungary and Poland. He's stirring the pot in the Middle East, basically by pulling the plug on Iran, pitting Sunni versus Shiite, ratcheting up a religious war that's going to destabilize that whole area. And this is actually good for America because if oil blasts through $100, shale oil starts to pump. Though not right away because they lack the pipeline capacity to deliver it all up. And so that won't be in place until 2020. But the big area is the South China Sea. That is scary because China has built military stuff onto these islands that it has created. It wants to control that part of its backyard. And Taiwan is this endless thing. We've got the Korean Peninsula problem. It's not so much about Kim Jong-un, it's about China and America. And now we have this disaster of a summit where Trump thought he was going to get a peace prize, maybe not happening because these advisors that he surrounded himself with are out there mouthing off about, yeah, we're going to pull a Gaddafi Libya on on North Korea. And of course, everybody reads the news and they're sort of saying, yeah, America can't be trusted anymore. So I'm not sure how this Korean Peninsula problem is going to get resolved, but there's people in the United States who want war. They want war on Iran. They want war in North Korea. And I'm not sure what the American people will say about that. We could end up with massive civil unrest in the United States. The governor of California has a number of times pointed out that California is the 5th biggest economy in the world. And I live in California, and the stuff you read in the news and all this stuff getting worked up, people getting worked up about, in anybody I interact with, nobody's talking or thinking about it. They're reading this, it's happening elsewhere in America, but if it starts to happen in California, it will become the disunited States of America. It will be the balkanization of the United States. And of course, Putin's loving that possibility. So for 10 years, I've been talking about this unfortunate trend of the breakdown of globalization, of the world fragmenting into its own economic zones. It's not a particularly new idea. George Orwell talked about that, I think in 1984. But the key thing to think about is that chart on the right, which shows where all these metals primarily come from. In the United States, it doesn't produce a lot of the metals, and indirectly it is one of the biggest consumers of them. China, of course, is now the largest. But if this type of fragmentation of free trade happens, they haven't really. The first problem is the complex supply chains that are all interwoven and all kinds of stuff starts to fall apart. But the other is, even if we say, well, screw the rest of you, we're going to build everything in America, a lot of the raw material inputs come from elsewhere. And they're not really thinking this through. With regard to gold, it dismays me how quiet the gold bugs have become. Until Obama came along, it has only been Republican presidents who increased the debt by a greater amount than any predecessor in the United States. And Trump won't let any Obama record stand, and the policies in place now, the debt is going to go way up. And if they want to start military adventures like Iraq again, it's going to go higher. And yet gold is sitting there doing nothing, and the gold bugs are very quiet. So why is that? Well, unfortunately, the gold bug ideology, it's really just ideology. They don't really believe what they're talking about. Their man is now in power, and that's going to be great. So I see 3 scenarios. One is that the Republicans retain control of the House and Senate in November, and Trump carries on with what he's doing and probably gets reelected 2 years later. And that's the disaster, the apocalyptic scenario that worries me. It'll ultimately be good for gold, but it's in that category of be careful what you wish for. The second scenario is that the Democrats get the House or the Senate, maybe both, and then all of a sudden we have what we had in November 2010, when the Republicans got the House, and then Obama was basically hamstrung. He couldn't get anything done. They extorted him. The Democrats will then extort the Republican administration, and we have a muddle going forward. Maybe we're lucky and the economy doesn't tip into a recession. It's not the greatest scenario. The third is that Trump, for some reason, becomes unable to execute his duties as a president, and Mike Pence becomes president, the vice president, and he's regarded as a generally weak group. He's pretty much an evangelical. If he's suddenly in charge, he doesn't have the bullying power of Donald Trump. You will see the moderates of the Republicans and the Democrats start to collaborate to get things back on a proper track. And ultimately, I think the United States two-party system is going to turn into a three-party system where the moderates from the Democrats and Republicans form a center party, and then there'll be the fringes, the right wing and the left wing, the Bernie Sanders crowd and the other ones, the Trump-type people in the other corner. And then they'll have to do deals with each other, and we maybe get back to a pragmatic problem-solving approach. The negative scenario is one that's going to cause what I think is a back to America movement. Now, down in the States, I hear nothing about cannabis. Yeah, California, it's now legal, but nobody cares. It's not a big deal. Canadians are all wrapped up in this whole cannabis legalization process. They're not interested in the resource sector to any great degree anymore. But there's this huge pool of American investors out there who are going to rediscover that if we're going to continue on this Trump path, we need to go exploring in our backyard. And when the EPA came along in the 70s, they kind of said, okay, forget the United States, we're going elsewhere. In 1989-91, when communism fell apart and all these third world frontiers opened up, yes, we'll go there. And of course, China volunteered to be the world's toilet for emissions and stuff. Pollution is terrible there. It subsidized metal prices, and it created a vulnerability for the United States. So shifting back to exploring for all metals that you need for stuff, but even gold, because what Trump is pursuing is going to accelerate the demise of the US dollar as the single reserve currency of the world. And that transition's not going to be pleasant, and gold is the best way to navigate that transition. And even for the United States to have its own new gold deposits, it's going to be important. Let's find the missing 300 million ounces in Nevada that are buried undercover. Let's go back into these old camps and find big gold deposits, but let's also find other deposits. It's going to become almost a patriotic thing, and it'll straddle the entire political spectrum. So for companies that have projects in the United States, they should start thinking about pitching their story to appeal to America's survival instinct and a siege mentality, which is going to be the result of this Trump's back to America isolationist policies. So in January, we had Nevada Exploration Inc. here. Stock hasn't done anything. It's gone sideways, but they've got targets developed. They're ready. If they raise money, they're ready to start doing it. That's Nevada 2.0. You get one big win. Quinton Henney tried it with NV Gold across the valley, but so far they bombed out, and now they're looking at a younger epithermal type system somewhere deep. That's a non-starter. You want older Carlin-style systems like Cortez Hills Pipeline and the Carlin itself. InZinc was here, and the stock has gone down, so that's not great. Anybody who listened and bought it last January is probably unhappy, but that's because the financing came free trading at 10 cents, and the market's so pessimistic. All the warrant holders are sitting there, trying to sell their stock so they can clip the warrant and flip the stock. But drilling is underway. They've got a couple holes done. They're going to do a big step out towards that hole that they hit that somebody hit to the east that was never followed up. So this is a potential big discovery play. It already has a zinc resource. The zinc price has stalled. The inventories are starting to rebuild as new supply starts to come on stream. It's potentially vulnerable if this economy does tip back into the can, but probably 120 a pound zinc is going to be the new long-term reality, and this project works. So it's in Utah. This is one that should be capturing the imagination of American investors. And one of the companies that will be here today is Mineral Mountain. This is the third time I've had them here. Maybe the third time is lucky. From that chart, you can see that the last time didn't work out, but they've only started this problem. Homestake is iconic for the whole American sense of a gold producer. 40 million ounces produced over 100 years. And there's potential for more. It takes more money. This is something like what the Osisko guys should be doing in a place like this, rather than in a little ratty district like the Windfall district in Quebec. They should be putting this type of money into tracking down these ledge-type deposits in South Dakota. Now, electric vehicle mania. If you listen to the Trump policy, climate change is a fiction. Well, maybe not a fiction, but fossil fuel combustion has nothing to do with it. And even if it does, it's too late. There's no point bothering, so let's just burn fossil fuels as we can. And so you think, okay, this cobalt mania, this electric vehicle mania makes no sense. We're going to have gasoline-powered stuff forever. But China keeps powering along. They want to be fully electric vehicle by 2025. And so you ask yourself, so they believe in this climate change problem? Well, half their electricity comes from coal, so it's a big wash. It has nothing to do with climate change. It has to do with oil dependency. And these strategies that the United States is pushing, which is going to disrupt the global supply channels, it's a huge problem for China. So getting away from using oil as a transportation fuel is their strategic imperative. And they're making big investments in lithium. They've got their lithium supply sewn up, but Congo is still the big problem. And now we have Ebola rearing its ugly head in Congo. We've got problems with Gécamines and Dan Gertler messing with Glencore and the Katanga project. So cobalt prices are going to remain strong. There is a magnesium ion alternative battery that I think is going to displace lithium ion in 10 years, but that's 10 years from now. So the question now is, who has a good cobalt resource in a jurisdiction that's secure? And Namibia Critical Metals is my company here, which is, has this project, and we'll hear more about it. It's next door to Celsius, which has just outlined a very substantial cobalt copper resource in a country that is probably the second most stable country in Africa after Botswana. So, and they also have a rare earth deposit because of that magnesium ion. Battery becomes reality. The magic metal is going to be yttrium, which is a heavy rare earth, and they have a very heavy rare earth enriched deposit in Namibia. And Verde Agritech is here for potash. Now this company is interesting in that they've come up with an alternative form of potash. And you can see in that chart that had a big heyday. I've covered it for 10 years now. They raised and spent 60 million bucks, and then they came back to the original square one and discovered that not doing anything special to this green sand material is needed to have plants take it up. And so they are now relaunching, building from on an internally generated cash flow basis, grabbing part of the Brazilian potash market, all of which is imported. And you can see that Belarus and Russia are a major source of potash. A price war that they started is the reason potash is 220 bucks a ton rather than higher. But if Europe turns into a mess with Russia annexing parts, Latvia, Estonia, all the Baltic states, and all these trade embargoes come, potash prices go through the roof, and Brazil has a huge problem because it imports 90%. And prospect generator farm out model, I have Eagle Plains Resources here, and they just spun out Taiga Gold, and they retain 20%, and the stock's down because of the spin out. But when a prospect generator that has not had a rollback for 20, 25 years and has money in the treasury and still less than 100 million or so shares issued, wants to drill its own property, spend some money on it, I like to pay attention. So they're here going to explain what they're doing there. And then the final company is Lorain Copper. This is a classic toiling geologist which did a deal with a rampaging geologist, a powerhouse called Mark O'Day. Their company just started trading 6 million bucks in the treasury in British Columbia, carbonate replacement style deposit. And it's going to be high grade, polymetallic. So if they start finding something, and again, it's the same sort of thing as what Arizona Mining found at the Hermosa Taylor project in Arizona, that will capture the market's imagination. And there's a group behind it too that knows how to promote. And then finally, I'm still involved with the Share Collective. In fact, we're starting to ramp up activity in it, and they've opened it up. Anybody who wants to register as a beta tester can now do so. It doesn't cost anything because it's still in beta. And I will be leading journeys into two groups, Nevada 2.0 and the Pilbara, where we will go in there and start to visualize what is this stuff potentially worth. And the Share Collective is going to be the new way the public thinks about these resource juniors and their projects. And something that I'm introducing, I've started a workspace on Slack for Kaiser Research members where you will be able to post comments, ask questions. I've decided I want to be more interactive with my audience. It's closed, nobody else can see that, and we'll still publish the website. It's an information portal. We'll teach you how to use all the resources, and you can go in there and bug me and say, yeah, you haven't updated us on this or that, please do so, and I'll be able to see that nudge and act on it. And right now, nothing expires beyond the end of this year because I'm going to be changing the pricing model for it. So if you do $100 now, you get 30 days of absolutely everything. You'll be able to get into the Slack channel, and then you'll get the Spec Value Hunter commentaries until the end of the year. Thank you.